Should you bank up all of the hours that you work and get them all paid in 1 week, or should they be spread out throughout the year? And does it really make a difference in how much you owe in income taxes? That's what we're going to look into in this video. So I often hear people say, I'm not going to work overtime, or if I do work overtime, I'm going to bank up those hours and I'm going to have them paid later so I don't lose a lot of money to income taxes. And sometimes I even hear a worse thing, which is that the employer offers the employee the option of saying, well, you've worked 60 hours, which is 20 hours more than normal. Those extra 20 hours, you'll bank them and I'll pay them later, but I only pay 20. Whereas normally if they pay them all in that given week, they should pay time and a half or double time depending on the scenario. So that person who's working is actually losing out by getting those hours later. And the common idea behind that, and the reason why they would accept that, is because they think, well, if I get paid everything now, I'll lose a lot more to income taxes than if I get it paid later. And that is completely false. And a lot of people think this way, so I really want to make sure I clarify this. So if you go back to the video that I covered on marginal taxes and computing income taxes to be paid in a year, the thing that you have to look at and you have to remember from that video is that when the government calculates how much income taxes you owe, they're not looking at how much money you made every week of the year. They're looking at the total amount of money that you made in the whole year. So if you have the option of getting paid $50,000 once in the whole year, or $1,000 for 50 weeks of the year, which one's better? Well, in reality, at the end of the year, they're both going to lead to the exact same outcome. In both situations, you've earned $50,000 in the year, and in both situations, you will owe a specific amount of money on that $50,000, and it's going to fall into a situation where you keep whatever is left. The difference, though, is probably what you're going to have paid at that specific moment. So this leads to two options. Well, one option is either you're going to pay too much at first, which means that when income tax season rolls in, you will have an income tax return, or the other option, you're going to have paid maybe close to what you should have paid, and in that time at the end of the year, you're not going to get any money back. And sometimes in life, you don't pay enough, maybe because you have two different employers, they don't know that you have two different jobs, so they just don't calculate it the same way. So why are you getting more money deducted when it's $50,000 in 1 week versus $1,000 every week, like almost every week of the year, 50 weeks of the year? Well, the reason for that is because the computers that run our payroll are not necessarily have a crystal ball. They're not necessarily forward thinking. They're machines. So when you tell the computer, I am going to pay this individual $50,000 this week, the computer is trying to establish what kind of deductions we could take away from this pay to make sure that this person doesn't get screwed over when income tax return seasons come in. And by doing so, it says, well, he earned $50,000 this week. What stops him from earning $50,000 for all the remaining weeks of the year? And if that's the case, well, the computer system's kind of establishing that you're earning like more than $2.5 million a year. And obviously, if you were to earn $2.5 million a year, you're like pretty much all of your salary is going to be at that highest tax bracket, because everything above like $250-ish thousand is at that highest tax bracket. So it's kind of assuming, well, this person owes taxes on like most of it is going to be at like 50+% rate. So out of that 50,000, there's a good chance that you'll only get 25,000 in your bank account and the rest will be kind of held. Whereas in the $1,000 per week scenario, well, the computer's saying, well, he's earning roughly 50,000 a year. At 50,000, you might be more with an average tax rate of like 30%, let's say, keep it simple. So they should deduct 15,000 from that. You should be keeping 35,000. So obviously, over the course of the year, one scenario you're keeping 35, the other one you're keeping 25. Seems like the case of 1,000 per week is superior, but at the end of the year, when you do your income tax report, we're going to notice that in that first scenario of 50,000 in one shot, you've overpaid. So you're going to get $10,000 back by the government. So this leads to two options. Well, there's many options in life with regards to income taxes. If you speak with your employer, you could have them deduct too much or too little. And it's really based on your preference at the end of the day. But at the end of the day, mathematically speaking, they're both completely equivalent. What I mean by your preferences is that some individuals prefer to pay too much throughout the whole year. So then when income tax season come around, they're either not owing anything to the government or they know they'll get a return, which is great because like if the whole year you're running essentially with less money than you should, and then all of a sudden you get a bonus. And for some people, they take that bonus and they put it on their mortgage or they do something constructive with it. And for them, they like paying more income taxes throughout the year and then getting that bonus. Some other people prefer just to pay the right amount the whole year and then not get a bonus, not lose money. And then there's some people that prefer to not pay enough throughout the whole year to then owe money when income tax returns come by. And the only reason you prefer that situation, because it's kind of annoying to have to pay those income taxes at that period, is because throughout the whole year, you're living with more money. And if you do something productive with that money, you could generate interest on it, which can make it for a better, financially speaking, scenario. I personally prefer to just kind of either pay the right amount or overpay a little so I don't get bad surprises when income tax season rolls in. But at the end of the day, how much money you owe to income taxes depends on how much money you earn in that whole year. So coming back to the initial story about that person who works 60 hours a week, that person should get paid overtime. So you should never accept having that extra 20 hours postponed later and not having like a conversion rate of like 1.5 or 2 times the hours that you paid because you were working overtime. If your employer offers that, you should always refuse. Having the same hours, let's say the 20 hours should have been paid time and a half and they converts to 30 and they pay you 30 hours in the future, that's fine. It's kind of like comparing the 50,000 in 1 week or spreading out through the year. There's no issues with that. But if you compare to 30 hours that you should be paid if you're paid that week with the overtime or 20 hours later, you're definitely losing in the 20-hour scenario because you're making less money. Yes, in the 30-hour scenario, maybe you would have paid a lot in income taxes in that given week, but that would have led to a return in the future. You're making more money. Earning $65,000 a year is always going to be better than $50,000. In the other video you've seen, it's impossible for you to earn more money and end up with less after you pay income taxes once year end rolls in, and that everything's kind of adjusted by the government. So hopefully this was interesting for you to kind of notice the difference between earning too much quickly or too little, spreading it out, different options out there. At the end of the day, it's based on how much you earn in the whole year. Hope you found this interesting. I'll catch you in the next one. If you found this video interesting, please consider subscribing or joining my class where I guide you to apply and expand on the information found in these videos to real life examples. Have a good day.